Good morning, this is Tom Aspray with the Market Wrap video for the week ending November 11th. Election finally over. I'm sure we're all glad not to see any commercials from either side of the parties. And also we got the CPI report out of the way, and boy was it in a report. One of the more dramatic days I've seen in over 40 years in the markets, and let's get straight to the charts. We'll see what happened. You don't see 5% gains in the S&P very often, or over 7 in the NASDAQ 100. You can see the weekly chart really resolved this pattern with a strong close at 398.44. You can see that we have the downtrend on the weekly downtrend and the upper Stark band around the 414 area, or 41.45 on the S&P. And if you look at this high right here, that was 411.73. So that's kind of, I think we can move up to that level. I would not be surprised to see a pullback sometime this coming week, probably by midweek. Weekly AD line turned back to positive here. So, of course, got major resistance connecting these two highs. As I suggested, the growth value ratio looked like growth was a bit oversold, and they sure got a pop last week. Though you can see that the weekly chart of the Qs did not look nearly as good as the SPY. Still below the 20-week EMA, which is at 289.85. We closed, a couple of points below that. Downtrend at 309, Stark band here. So, somewhere around the 300 area looks to be reasonable there. The AD line on the Qs just fractionally turned positive. I mean, literally by 24 issues on a weekly basis. Obviously, it does require more positive numbers this coming week. A down week would not make this look very pretty. There was a surge in buying on Thursday. You can see, we got it was well over probably 97% positive in early trading. There were like only 194 issues declining on the NYSE. By the end of the day, it evened out, but still well above, I think, 94, 96, following up on Wednesday's selling, which was fairly heavy. So you can see that the S&P's got 4021 is the R1 on a monthly basis, and then 4170 is the R2. So be interesting to see over the weekend what happens, whether the positive election results for the Democrats will cause some selling. There were some reports that day traders were selling into Thursday's strength instead of trying to buy the dip. So if that's true, that'd be interesting. The daily AD lines are all positive, and all of the weekly AD lines except the NYSE are positive too. So you can see this nice sharp move to the upside here in the SPY. Okay, back above the 50 and the 200, and right now the 20-day exponential is crossing back above the 50. I feel a lot better on those if they were both rising sharply, but that will take time. AD numbers, we talked about this bullish setup. This little pullback on Wednesday was, if we dropped back below the moving average, I probably would have turned more cautious than I did. I just raised the stops on our long positions in the SPY, etc., and they weren't in danger at all. So, but nevertheless, you can see the moving average is rising here. But if we see a pullback, then we'd like to see even stronger AD numbers to get us back to the August highs. If you look at the stocks only, positive but not impressive. Same thing for the NYSE all, positive but not impressive yet. We've all broken the downtrend, so that's usually a pretty good indication. So obviously we wouldn't want to see us drop below any of the recent lows or their EMAs on either of these AD lines. The scenario for interest rates was turned out pretty perfectly last week. I was looking for a move up towards around I think 4.74 to 4.78 or 6 or something in the 2-year yield. We got up there, new highs, and then rolled over. The 2 years holding up of this last swing low, so it really needs to crack that to confirm a top. The 10-year T-note yields has dropped below that, so heavy short position in the Treasury note futures, as I'll discuss in this latest Forbes article. So there should be some more short covering there. The short interest, or the large speculator short position, doubled since August. So when you see this sort of formations in the MACD and the MACD histogram, you can see we barely got positive on that rebound. So that's what you want to see. Pattern of lower highs. Felt pretty confident we were going to see a rally failure here, and we did. So on a short-term basis, I think we could see a bounce higher in yields, maybe a few days by midweek. That likely to coincide with a pullback, in the stock market, and create probably a better risk entry in some stocks and some ETFs. This is the growth value ratio I was talking about. You can see it had a nice pop. Still pattern looks negative. Has to get it really above this peak to get me interested. Otherwise, it's probably going to fail, somewhere around the 20 period EMA and, or that 1.85 area. High-low data continues to suggest this rally can go higher. A nice pop up here. Would like to see a move well above 150 in the next week or so, confirming the higher level of stocks forming new highs. It's kind of a mouthful. The downward trend in the number of new lows is clearly still intact. Similar pattern on the NYSE, 81. So, we're below this high here. Not necessarily a worrisome divergence at this point, but we'll keep watching it. And if we continue higher for another week or so and we don't see an increase in new highs, I will get more concerned. The NYSE Advanced Minus Decline Oscillator, plus 752. So it could, it really hadn't gotten that much overbought here. You can see we're up near the upper Stark bands here, or the equivalents in the NYSE. Most of the averages are that way, and so that does, suggest that, if overseas markets are strong Monday, we should see another spurt to the upside before we see a pullback. And based on the QQQs, you can see we're bumping into the upper Stark band here, and at this point, they're 88% of the, or 88 out of 100 of the stocks are above their 10-day moving average. So, that's getting up in the range where we normally would see a pullback. 273.30 looks to be the 20-day, but we're probably not. That's 14 points below where we closed, so I doubt we'll get that much of a pullback. Well, we are long heading into the week, and flipped here to the long on Sunday, and just made it to one of the targets up here. We're looking at actually the last 6 or 7 months of trading, and hope to have a special presentation for all the futures traders in the next couple of weeks. I'm looking for a regular session, Zoom session for either the Viper ETF or Hot Stocks people on next Saturday. I'll confirm by Tuesday, and hope you can join me. And you can see that it reversed back to the short side. That looked okay. But as we got in here, I've sent out a bulletin to alert clients and saying right in here, like the risk was really not favorable on either side. My AD stuff after Wednesday's Bitcoin plunge, was still positive, but it weakened. And having a close-only stop when you're coming into a big report was quite a wild ride. We got down to, the first target here at 37.50 was the low, so we got back to 52. Didn't get down to 22, on that move. So we took a couple of, small profits and then got stopped out after the CPI report, at long at 38.33, and hit a target at 39.13 and at 39.89. So that 130 points almost made up for the 80-point hit we took if you were following the close-only stops as prices reversed. So pretty much getting overbought here in terms of the stochastic confirmer. Volume is looking quite good. And if you look back further, that's a pretty sustainable move in the volume. So we'll be looking for a pullback here to hold this blue moving average. In terms of price, what kind of pullback would you expect to see? Well, the 20-day is at 38.96. If you back up a little bit, it was interesting that for those of you who are looking for, one of the things we'll suggest is moving a stop to break even. If you're in a trade it's not materialized, you can see the pivot was a good place, 38.02, right where we got short for a stop. We moved through that and accelerated the upside. So, next week pivots at 39.14, so that's kind of the first area to look for support hitting in next week, down to that 38.96 area and just below 39. You really probably wouldn't want to see a move much below 38.69, the midpoint pivot. That could change the trend. So we'll be putting out some of the actual numbers for future traders, but currently the stop's at about 38.84 on the futures based on the 260. So for next weekend's Zoom session, send me your questions and just put Zoom in the subject line, and Tom, ask me specific questions and we'll try to handle them as many as we can. We'll probably do a little longer section and next week, and I look forward to having all of you join us. So regular reports come out tomorrow, and thank you very much for tuning in.